Hi everyone, this is Matt Curfman here for our April edition of Matt's Minutes for 2016. It's been probably 4 or 5 weeks since my last video, and in that video I talked about trying to predict, or rather not trying to predict, what the markets will do in a day, a week, a month, even a 6-month period, and I quoted Warren Buffett. And so what I guess a little bit of a takeaway is we're seeing the markets actually come off of their lows. That had started back in March, and we're actually seeing some decent price recovery in the broad markets and in individual holdings. A lot of you attended, and we actually were at full capacity at the end of March for our halftime report over at YCharts, where both myself and David had a chance to talk to a lot of you on what we thought was happening in the environment, explaining and clarifying that the environment is going to happen. We can't control the environment. We can control how we respond, how we react, how we plan in the volatile environments. And so many of you who rode through the market swings, we had 300 and 400 point days. I guess we're getting a little bit more to a normalizing period, at least for now. Doesn't mean that that's going to continue, but let's take a deep sigh, a deep breath, and just be comfortable where we're at for the moment. I guess I would tell you our tone is optimistic, but we're cautious. We feel really good about making the decision to hold on to things through the downswing. I told you in January and February, many of you received confirmations from Fidelity. When the markets were at their lows, we did actually make some changes within the portfolios. Those, by and large, are playing out very well. And so we'll continue to monitor each of those things and look for opportunities as they present themselves. Some of the bigger exposures you have would be high yield, things like a Medley Capital, a Pennant Park, a Guggenheim Credit Fund. In addition, high exposures in small caps, especially biotechs. Those are actually where we've seen the biggest bounce back, and so that's helping your portfolio values come back up and stabilize. And it's good to not be getting the 300 and 400 point swings on the broad market like the Dow Jones, for example, is one that's heavily tracked by most investors. I told you last time that as we get into the summer and especially into the fall and winter, we are actually building something called the Retirement Income Solution. This will be very important for those of you that draw income on a monthly basis or quarterly basis off of your portfolio. We're coming up with maybe an alternate method with ideally a lot less volatility, so you don't have the concern of what's happening in the market and is this affecting my monthly draw in the near term. So more to come on that. Please feel free to continue to send questions. You can email us or call us, questions@richmondbrothers.com. Thank you so much for tuning in, and we appreciate, as always, having the opportunity to serve all of you. Make it a great day.